Is Canada's overheated real estate market threatening to destabilize the economy? Hey everyone, and welcome to this week's episode of the Vancouver Life Real Estate Podcast and YouTube channel. Here we're going to talk about, well, exactly what we said was going to come. A lot of finger pointing. We're hearing articles. The news is coming out talking about how, RBC actually coming out and saying how the overheated real estate market in Canada is actually threatening the economy as a whole now. We want to fact check it. We want to talk about it and, at least have a conversation to see whether or not it makes any sense. It's interesting because one of the big arguments in that particular article is that young people in particular are having to draw money out of other investments that would otherwise be helping to turn the economy. And it's finding its way into the real estate market, which is fueling the prices and taking away from what would be driving other parts of the economy. It's an interesting position. But that being said, the sentiment, I think, from the public is that government policy in place, it's going to forever protect homes. And so people are not that afraid of continuously bidding higher and higher and higher because we've had 44 years of very strong growth. Dan, what do you think?
Yeah, people now, because of what's just happened this whole past year, this whole 2020, and everyone expecting, at least initially back in spring, for housing prices to plummet, and then seeing the opposite happen and really starting to get an understanding as to why, and seeing that, yes, the sort of policymakers that be the government and the banks protecting home values and setting them up to increase and literally implementing that quantitative easing that did increase these asset prices. From the outside, it definitely appears that, hey, yeah, the governments are going to protect housing and never let it fall, or at least not let it fall to any kind of degree that's going to radically affect someone's net worth, essentially. So it's kind of created this, there's no risk in housing sort of sentiment, which is obviously very dangerous to have. Mm-hmm. And I think people are throwing money at something that they think they can't lose. And yet you don't have to look that far back to see that, yes, housing does go through cycles. Of course it does, right? Yeah. I mean, look at 2016, 2017, right? We're talking 4 or 5 years ago.
Totally.
Like, if you weren't, around then, do a bit of research. That. Yeah, well, sure. Exactly. Right. So there's cycles, and sure, maybe those cycles only go down 10, 15% on average. That is 10 to 15%. And if you're looking at a $1 million property on average, can you sustain $150,000 swing in the value of a property?
Totally. And then the other thing to consider here too, is that I wonder with all of these people that are buying bigger properties and taking out more money than they typically would because interest rates are low, when the economy does start turning and the Bank of Canada does begin to move rates, are we going to see a different kind of housing problem, where you've got monthly payments that are going up every month, right? And creating a different pressure as well.
Mm-hmm. Now the average, if somebody is buying at the peak, just like if you bought at the peak of 2016, 2017, yes, there is potentially the likelihood of that asset price or that home going down in value, right? If we emulate what happened in 2017, average home price dropped 11% before bottoming out, right? So $110,000, $120,000 if we were to see history repeat itself. Right. But on the other side of that, equity in homes is at an all-time high. Wow. If you can believe it, the most recent study here said that the average household is sitting on about 50% equity. Wow. So your $1 million house is sitting on a $500,000 mortgage. Wow. That's average. And that's an all-time high spread, right? Because when you look back to like 2008, 2009, the financial crisis, and the reason people south of the border in the States here, the reason a lot of them went underwater is because that spread was only an average of about 10%.
Wow.
right? And we
Wow.
know what caused all that and whatnot. But the point of this statement is that the average homeowner could literally see 50% of their house valuation disappear, and they would still be at a point where they weren't underwater.
Right.
And
Right.
that's a very big difference.
Yeah. So we're not talking about a heavy, well, an incredibly high leveraged amount of homes. I mean, it sounds like to me, based on that stat, that there's a lot of equity money flowing through families, which is ending up in properties, which is helping to balance that equation. It's not so much, you know, your typical 20% down or 10% down or 5% down or 0% down, which we saw in the States, right?
That's
And
right.
that would fuel, um, well, we've just go back and look 2008.
hmm
It just damn near ruined all the markets in the world for a little while, anyways.
That's it. So let's kind of unpack this a bit more here. So with RBC saying it's going to destabilize the economy,
Mhm.
they're saying because people are putting money into housing and pulling it out of other areas, and they're just going to be simply house poor, and the lion's share of their income is going to go towards that as opposed to just buying goods and stimulating the economy.
To some extent, I think they're also saying that where they would have typically invested in stocks in a company or something to that effect, or put their money to work in some other form, like starting a business or something else. That money now has to be used on buying a home instead of starting that business, which would then further employ people and et cetera, et cetera.
Right.
So I think that's a lot of what the argument is. If all of this money is coming out and not creating any industry, um, and going into the housing market, is that going to destabilize the rest of the economy, or is that going to limp the rest of the economy?
hmm
um, and there's some credence to that for sure, right? But I don't think that's the case across the entire country, right?
Yes, true. And is it not also true that Canadians tend to, unfortunately, like to use their homes and their equity as a bit of an ATM,
Yes,
right?
for sure.
If you're sitting on 50% equity,
Yeah.
there can be some people who are enticed to dip into that to buy goods, let's say, right?
Yeah.
Ideally, if they do, they're buying more real estate, is my opinion. But some people will go out and feel rich because of their house and buy something that maybe they shouldn't, a boat, a jet ski, whatever the case may be.
Right. Yeah, and I think also there's a bit of an argument or sentiment in the article too, that it's the banks are making it too easy or too accommodating for people to take loans out to buy a secondary property as well, right?
Mhm.
And that's a big piece of that article, and it really is. It's got two sides to the argument for sure, but I think it's always short-sighted, because we need people to own multiple properties in order to rent these properties to other people, right? It's I mean, as much as we would love everybody to own a condo, that's just not the way it's going to be. And when you first arrive in the country, you want to rent first before you buy anyway. So where are they going to get this rental stock? And is the government responsible for owning all the rental stock? And is that even fair? There's a lot of it's difficult because we need to stimulate the economy, and part of that too comes from making investment in real estate. So it's a real double-edged sword, and I kind of see what they're saying, but at the same time, I think they're missing half the argument.
I am always somewhat baffled when the figure pointing is, oh yeah, it's investors. It's
Yeah.
investors that are screwing this market, and yet you'll have the same people saying rental housing is unaffordable because there's just not enough of it.
Yeah.
Okay, well, who do you think is supplying rental housing? It's certainly
Exactly.
not just the government, right? These people that own multiple homes and condos, they're renting them out. People
Yeah.
aren't sitting on empty homes for the most part, and the ones that are being taxed accordingly. So
Yeah.
you can't, sort of have your cake and eat it too, as they say, which I find odd for RBC to kind of point out that some of their solutions are to, go after investors, make it harder to get access to credit,
Mhm.
put lower caps on refinancing is one, raise the down payment is another
Yeah.
option that they're suggesting. No mortgage interest rate tax deduction. I mean, that's directly targeted at investors.
But none of this, Dan, we talked yesterday or not yesterday, last week about the problem with supply.
Hmm.
This is all taxing demand again.
That's right.
It's all, the demand is here, and we need demand for economic growth, right?
Hmm.
So there's got to be a better balance. There's got to be a different alternative than tax again. It just and I mean, with 76% home ownership, you know, raising capital gains tax or applying that to a principal residence, or, you know, I don't know. I don't know how you survive that politically. I don't think the sentiment is there to support that. Um, but at the same time, people they're not being given a choice to increase supply. Their developers are not being sent in, given incentive to do that.
Hmm.
Um, we're not moving fast enough to build in order to meet the demands. I mean, these are things we've seen before in history, and I don't know why we're not dealing with it like the way we should be.
It's true. And it's funny also to hear that they're saying, okay, let's make it harder for people. We'll call them investors if you want, call them rental housing providers if you like as well.
Yeah.
They're saying, okay, well let's make it harder for people to supply rental housing. But then they're also saying, oh, but it's too expensive now, or it's getting so expensive for governments to even buy and build as well,
Yeah.
to create affordable housing.
Well, it's part of the policy not working.
That's right. Yeah.
It's their, you know, I've got many sayings for it, but I can't tell you what they are right now.
Yeah, and obviously, we've talked ad nauseum now for months about just how incredibly hot the market is, right? People listening to this have heard it many other places as well, definitely lately. I mean, you cannot go a day, let alone a few hours, without coming across an article, even online here, that's talking about how hot the Canadian real estate market is.
Yeah.
And so, like Ryan mentioned, it's finger pointing right now, and it's gotten so exceptional here that even the IMF is recommending that Canada implements some anti-speculation taxes, and the IMF is citing Canadian real estate as a risk. It's a risk because it's going up too quick. And while we agree the appreciation rates we've seen in the last few months are absolutely unsustainable and should not be happening at this pace, to get that level of outside, I guess, attention.
Yeah.
Thank you. That's exactly the word I was looking for on it. So, and what here again, how do you slow it down? Tax. IMF, tax it, remove the exemptions on taxes and make it harder, tax the demand, make the demand suffer.
Yeah. Whereas, I think you need demand in order to keep it turning.
Mm-hmm.
And it's interesting because, we'll jump into this a little bit later, but one of the arguments that's not coming up here is the fact that Canada has started bringing permanent residents across the border, right, in big numbers.
Mm-hmm.
And I'm sorry, but that's more demand again. There's going to be more demand for housing, and we've got ambitious goals here, like ambitious immigration policy. Almost 500,000 people a year, at least legally, right? And so those people are going to need to rent. They're going to go to major cities, and that's going to be every year for the foreseeable future, right? So if we increase in the next 5 years, 6 years, by 2.5 million people just in permanent residence here, I don't know.
They're going to have to live somewhere.
Yeah.
And the reality is just too, like this just kind of crossed my desk the other day. The amount of money that is now coming into Canada from Hong Kong is tremendous. In 2020, just last year, a record almost $44 billion in funds was electronically transferred from Hong Kong into Canadian banks.
Well, why did we never hear about that?
It's out now. It's out. I mean, this is tracked, right? This is FinTrack. So I believe this
Crazy.
is quite public information.
Wow.
For reference here, that's about 2%. The 44 billion, that's about 2%, or it equates to 2% of all the funds deposited into Hong Kong banks in 2020. So this isn't just like cumulative wealth. That's just an example of how much money is in Hong Kong and staying there, but about 2% of new funds came over to Canada. This is, we talked about 2016 and how there was a much higher level of foreign buyers taking place, of course, in Canadian real estate. 46% more funds were brought into Canada electronically from Hong Kong last year than in 2016. But here's the thing. Foreign buyers of real estate in 2020 was like almost at a record low. It was like 1.2%. So that money is not, or did not last year, go into real estate. I think the differences, or what they kind of took it as, is this is people that are actually moving their money here to live. This is long-term money. These are people that are trying to immigrate to Canada, buy a great home or a family home, and live in it for years. They're looking to buy near schools, that type of thing. These aren't people that are speculating. They're not just throwing money at real estate because they can. We look to the visa applications that are up like 10% last year, something like 8,100 visa applications from Hong Kong, people coming over here. And apparently the average family is bringing about $1.5 million in cash with them.
Wow.
Mm-hmm. This comes from Equitable Bank out of Toronto.
Well, so, and we said it last week as well. So much of the way people buy real estate in Vancouver is through their family, right? Mm-hmm. And here you've got the average family bringing in $1.5 million.
Yeah.
Welcome to down payments. Welcome to how people are buying their real estate, right? And one of the big arguments here in Vancouver is that your average income doesn't support the house prices. But when you've got an average family like this bringing in 1.5 million in cash, it's going to find its way into the real estate market. That's going to be investable money, right? And families with that kind of capital too are looking to invest it. They're not looking to do anything else with that, right? So it's smart money.
It is
smart
money.
That is.
Yeah, no, you're exactly right. And it's increasing, right? They're saying this is a lot more than just a spike, right? This is a wave of people and a wave of money that's coming from Hong Kong right now. So much so that they cited the average Hong Kong bank account from someone from Hong Kong in the Toronto-based Equitable Bank. The average deposits increased by like 30% in 2020. And this is, of course, compared to locals who saw about 4% increase in their savings account.
So let's also remember that Hong Kong is also in a position where I think some of the people who live there are also worried about what's going to happen to their money and what's going on politically there, right? So, that's
what's driving it.
Yeah, the movement of money. So don't think that it's coming as a place of, we're trying to buy up all your real estate so nobody has any, right? It's not that. It's there's a reason for it, right? People are trying to get their money out so that they can go live a better life in another country. You got to remember that it's one of the founding principles of Canada is immigration, right?
That's right. And Canada's basically said doors are open, to the tune of 400,000 people that want to immigrate this year.
Yeah.
Right. And so they're bringing people in, and a lot of people that are coming are wealthy, and a lot of people are looking for homes. So again, the solution is to tax the demand. That doesn't quite seem right. What we did also see is, what we did also see recently here. So something coming out for the city. A couple of city councillors are seeking broader support to direct city staff to help with clearing this the permitting backlog that we know is so difficult, right? We know it can take some builders a couple years even to get their permits through.
Oh, at least. Yeah. I mean, the idea that you can build quickly in Vancouver, that's not a thing, right? I mean, it's been a lot of the conversation is that the city is also doing its part, making real estate unaffordable by making it take so long to build the supply that we so desperately need. When you're in a housing crisis, you're in an affordability crisis here, and you're talking about implementing tax as opposed to reorganizing structure so that you can not have to tax the demand, but fuel the demand with supply. I mean, that's how you get to, I don't know, something that at least feels like it's reciprocal.
Yeah. Yeah. Good way of putting it. So, it sounds like at least we've got two people fighting for it, which
Yeah.
is a start. Their goal is to have cleared the backlog by September 2022. That's sort of the pace of, that's their aspirational goal here.
Do we know what the backlog is?
No, that wasn't shared, but obviously this isn't the first time that permitting issues have come up, right? I mean, in 2018, they hired, my understanding is 75 people at the city there to help with this, to help with permitting, right? And help on getting these pushed through. And it's just that the demand again has increased so much that they're just, backlogged by years here. And there was a study that was done that said, for example, and we're jumping over to business and licensing right now, similar office here at the city.
Mhm.
Current business and licensing wait time in Vancouver, it looks to average about 8.2 months. And the economic loss for this is calculated at $720,000 per license.
Holy cow.
Yeah, the average business is going to lose $31,000 per week by having to wait that 8.2 months. And you could just imagine the delay in development permits is understandably, this costly as well.
Well, yeah, and people are always asking, why is it so expensive to live in Vancouver? Well, here's a direct example as to why. You think that cost is going to get absorbed by either the business owner or the developer. It's not. We live in a capital market, right? And when you've got inefficiencies like this this is artificially increasing the cost of the real estate when it can be dealt with.
That's
right. I mean,
yeah.
I get that you have to hire 75 people. Maybe you got to hire 150. Okay. We're talking about a crisis.
Yeah.
We're not talking, we've got an affordability crisis. We've been saying it for a long time.
Mm-hmm.
And I get that, from the government's perspective, they hired a bunch of people to get, to deal with it. But, when I look at other countries around the world, when they deal with crisis, it's deal with it. I mean, anyways, I'm just getting angry.
Well, think about this too, right? We were just discussing how RBC is saying how the overheated market is going to destabilize the economy. Okay. And then here we are saying, well, one thing we can do to help the economy, how we can get money into it, is just by getting people the licenses that they need to perform their business on time, right? Every license costs the economy $720,000, every one. So, how many people do you need to hire to push one license through to stimulate, to get that money into the economy? Maybe that's one area that could be improved on to help things.
Yeah.
Right. Don't tax the demand, help the supply.
Yeah. And look at your profit per employee. Does that make sense? Right. Mm-hmm. Or your efficiency per employee? Because, like I'm saying, 75 might have been a good number, but it might have needed 120, right? Or it might have needed more in order to get that done.
That's it. That's right. And so, I mean, I know for myself, I've never seen more articles and conversations about implementing a capital gains talk than this last 7 days, for sure. It seems to be the easiest solution to this problem, right? To slow down housing. And so much so, even though that it's people, it's companies, it's owners that are talking about this tax. The government has not said a word yet. But at least in Toronto, the real estate industry they're already fighting back on it. The Toronto Real Estate Board is already making comments, issuing press releases, probably lobbying to politicians to not implement a capital gains tax. And the reason is because home ownership is basically the cornerstone of retirement planning for many people in this country. Preferential tax treatment has always been one of the many reasons that Canadians prefer property investment over productive investments.
Yeah, it's the way that people plan for their retirement in many, many ways. I mean, a lot of the way that people put their money to work is by paying down the mortgage they own and investing in the real estate market so that it helps pay them back when they retire.
Yeah,
I think if you change that, you've got a big problem on your hands.
Very true. Great. Okay, so we're going to quickly wrap up here. Just wanted to share some interesting numbers with people because we are, as of today, 4,981 units have sold this month. We are one day on Monday, we're going to crack the all-time high in sales. We're on track for about 5,700 units this month, which is
that's 10% higher than
ever.
That's
any
other time.
Yeah. Yeah. And yet, interestingly though, too, on the flip side, we've got, we're on track for a record number of listings in the same month.
Yay.
Yeah. Inventory, supply. Hey, what do you know?
Exactly. And that's what I'm saying. Like we need more of that. We need more of the market response. Right. So that's what's going to help the fastest is supply.
That's right. Price wise, if you can believe this, average home price up $50,000 this month.
Oh my God.
Yeah.
Sorry.
Yeah. We're basically at 1.2 million is your average home price this month.
I mean, when you compare it month over month, it's we talked about homeowners over the course of the year of the pandemic making, I think it was just over $1 trillion in net wealth, right?
Mm-hmm.
And here you go. There's no way a renter can ever keep up with this. Not a chance.
Well, right? And imagine saving. If you're feeling great, you're feeling amazing because you can put $10,000 a month away to save for that home.
Yeah.
Well, by not being in a home last month, that would put you $40,000 behind. Mm-hmm. And yes, we're in extreme months and this is not going to continue, but for that last month, that's what the data tells us.
Exactly. Yep.
Median price, 891, up 16,000. And, like we mentioned earlier, the HPI price is only 9K behind all time, which will be broken in March. So here we go. All time highs for every metric across the board. The three price metrics, sales volume and listing volume. What a month to be alive. It's wild out there, and maybe you can tell we're a little short on sleep right now.
Oh yeah, this is what we do with our Friday nights now.
yeah. It's about almost 9:30 p.m. on Friday, and we're just getting around to our pod. But hey, we do it because we feel it's important, and we want everyone to be up to date on what's happening in the market weekly. So thank you so much for watching. Thank you so much for listening. Yep. Please subscribe to this channel. Please follow our YouTube and our podcast, and visit thevancouverlife.com for everything else you need real estate wise.
Guys, I got to go put my kids to bed.
All right. Sounds like they're ready. Okay. Bye.
Bye.